Hello students, we will go over previous session basics and learn about different types of subscriptions as well as how to pass journal entries for collecting capital in various scenarios. As a caution, dear students, don't skip a second of the video, every second matters. Who will issue shares? Company will issue shares. Who will subscribe the shares? General public, or we can call applicant. The applicant becomes a shareholder when the company issues shares. The answer is no. He is only an applicant. Who will allot the shares? Company will allot the shares. Only on allotment, the applicant will become shareholder. Issued means inviting the public. Subscribed means applying for purchase of shares. Allotted means allotting the shares. Dear students, you now know what the terms issued, subscribed and allotted means. There are three types of subscriptions. Let us understand through examples. R Limited issued 550 crores shares of rupees 10 each. General public also subscribed for 550 crore shares. Is this a possible situation or not? Yes, it is a rare, but it is possible. Issued 550 crores, subscribed 550 crores. When the number of subscribed shares equals the number of issued shares, subscribed shares 550, issued 550, this is known as equal subscription. R Limited issued 550 crores shares of rupees 10 each. However, the general public subscribed for 600. Dear students, is this a possible situation or not? Yes, it is possible. If the number of subscribed shares are more than the number of issued shares, the subscription is said to be over subscription. R Limited issued 550 crore shares of rupees 10 each. However, the general public subscribed for 300 crore shares. Is this a possible situation or not? Yes, it is possible. When the number of shares subscribed is less than the number of shares issued, this is known as under subscription. Issued 550 crore shares, subscribed 300 crore shares. So this situation is known as under subscription. To reduce under subscription risk or uncertainty, the company normally delegates this task to underwriters, a specialized group of risk takers. When the public does not subscribe to the shares offered to them, underwriters take this risk for an agreed rate of commission. Under the Companies Act 2013, underwriters can earn a maximum of 5% commission. We will learn in depth about underwriters at the intermediate level. Before we move on, if you enjoyed this video so far, please hit the like button and remember to subscribe to our channel for more great content as well as share it with others who need it. On 15th August 2022, R Limited issued 10,000 shares of rupees 10 each at par. Public subscribed 10,000 shares and paid the entire money on 20th August 2022. Company allotted the shares on 31st August. Past journal entries in the books of R Limited. My dear lovable students, assume you are a corporate accountant for R Limited with a monthly pay of rupees 3 lakhs and you are entering journal entries in the company's books at the time of issue of shares. On 15th August, R Limited issued 10,000 shares of rupees 10 each at par. Dear students, whether the company is issuing shares or collecting money on 15th August, company is issuing the shares. On 15th August, will you pass a journal entry or no journal entry in R Limited books? We will not pass any entry because we will not be collecting money on 15th August. Just R Limited is announcing to the world that we require 1 lakh capital, inviting the public to contribute to the capital. A question that may arise in your thoughts: if the company incurs advertisement costs while issuing shares, we will pass journal entry or not? Yes, dear students, we will make a separate entry for the cost of advertising, expenses on issue of shares account data to cash account, transfer to P&L, or either treated as deferred revenue expenditure. We are only passing entries for the purpose of issuing shares at this time, not for advertising. Student, I am going to give you some real world experience that you may not be able to test at this level. Please pay attention. Once shares are issued, the general public will be allowed to apply. They must submit the application form and deposit the cash in the company's collecting bank. A question may arise in your mind: sir, what is the maximum length of time that an application process can be open? Maximum of 120 days, Nana. maximum of 120 days. If the minimum subscription is not reached within 120 days, then this issue of shares will be cancelled. The application money must be refunded to the applicant. As a result, most company use underwriters to sell shares. A question may arise, sir, what is minimum subscription? Minimum subscription is the number of shares that a company must sell before the deadline. Every company is expected to raise 90% of the total amount of the issue. Example, if company issued 1 lakh shares, then at least 90,000 shares must be subscribed by the public. Otherwise, the issue of shares will be cancelled. My dear students, on 20th August, whether we will pass journal entry or not, we will pass entry because we are collecting the money. When cash comes into the business, it should be debited to either cash or bank account. So bank account should be debited with how much amount? Nana? Number of shares issued 10,000. Issue price of each share 10 rupees. So 10,000 into 10, 1 lakh. Now the question is, which account should be credited? When general public applying for shares, whether they are applicants or shareholders, they are only applicants. They are only applicants. That's why we are crediting a special account called share application account. To share application account 1 lakh. Why is not share capital credited? Because shares have not been allotted. Dear students, when shares are allotting on 31st August, only on allotment, the applicant will become shareholder. So we pass a transfer entry, share application account data to share capital account. Only on allotment, share application money will transfer to share capital account. Dear Case B, on 15th August 2022, RRR Limited issued 10,000 shares of rupees 10 each at 10% discount. According to the Companies Act of 2013, shares cannot be issued at a discount. However, shares issued to its employees or directors can be issued at discount. Shares issued to employees and directors are called sweat equity shares. Assume RRR Limited issuing shares to its employees. And remember, my dear students, only sweat equity shares can be issued at discount. Public subscribed 10,000 shares and paid the entire money on 20th August. Company allotted the shares on 31st August. Pass general entries in the books of RRR Limited. Dear students, on 15th August, we will pass general entry or not? No general entry. We will not pass any entry because we will not be collecting money on 15th August. On 20th August, public subscribed 10,000 shares and paid the entire money. Whether we will pass entry or not, we will pass entry because we are collecting the money. What is the face value of the share? 10 rupees. What is the discount for each share? 10 into 10%. 1 rupee is the discount for each share. So face value 10, discount 1 rupee. So what is the issue price for each share? 9 rupees. Dear students, whether general public will pay for each share 10 rupees or 9 rupees, they will pay only 9 rupees. 9 rupees for each share. So what is the general entry on 20th August? Bank account data, number of shares issued into issue price for each share. Number of shares issued 10,000 into 9. How much? 90,000. Special account should be credited. What is the special account? Recall. Share application account. So the special account should be credited to share application account. How much? 90,000. Dear students, share application account is nothing but it's a dummy account. Dear students, a question may arise, sir, what about discount? We cannot book as an expense before allotment. Only after allotment we can book as expense. Nana. Mark my words, my dear lovable students, any coupon money received at the time of application should be credited to the share application account. On 31st August, company allotted the shares. On allotment, the applicant will become shareholder. Only on allotment, the application money will be transferred to share capital account. So general entry will be share application account data. How much amount received? 90,000. Discount how much for each share? 1 rupee. 10,000 into 1, 10,000. And to share capital account. Always, whether shares are issued at par, discount or premium, always share capital account should be credited with face value only. So 10,000 into 10, how much? 1 lakh. Case C, on 15th August, Triple R Limited issued 10,000 shares of rupees 10 each at 20% premium. Premium is calculated on face value. Public subscribed 10,000 shares and paid the entire money on 20th August. Company allotted the shares on 31st August. Pass journal entries in the books of Triple R Limited. Dear students, on 15th August, will we pass journal entry or not? We will not pass any entry because we will not be collecting money on 15th August. On 20th August, public subscribed 10,000 shares and paid the entire money. We will pass entry because we are collecting the money. What is the face value of each share? 10 rupees. Premium for each share? 10 into 20%, 2 rupees. What is the issue price now? Face value 10 plus premium 2, total issue price is 12 rupees. Whether general public will pay 12 rupees for each share or 10 rupees for each share, they will pay 12 rupees for each share. So what is the journal entry Nana? Bank account data, number of shares issued into issue price for each share. 10,000 into 12. How much? 1,20,000. Now a special account should be credited. What is the special account? Share application account. To share application account, 1,20,000. So any coupon money received at the time of application should be credited to the share application account. On 31st August, company allotted the shares. Now only on allotment the applicant will become shareholder. Only on allotment the application money will be transferred to share capital account. So transfer entry is what Nana? Share application account data 1,20,000 to share capital. Whether shares are issued at par, premium, discount, always share capital account is credited with face value. Number of shares 10,000 into face value for each share 10,000 into 10, 1 lakh. To securities premium balancing figure, no none. Please don't learn like that. Learn the way it should be learned. So number of shares issued 10,000. What is the premium for each share? 2 rupees. So 10,000 into 2, 20,000. Thank you for watching. Students, please consider subscribing and click the like button and share with your friends. Bye for the day.